Good day, everyone. This is Patrick from EasyFX Code Trading System, and it is Saturday, the 6th of November, 2021. And this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the second week of November. Let's begin with the Euro. It still managed to find support. It did dip lower on the Friday after the US non-farm payroll report to test the 162 fib extension of this reversal move in green. That's the green fib extension here, and managed to find support there. There's also confluence with this shorter range. I go to the 4-hour time frame. Shorter range fib reversal that started from the previous Friday and managed to pull back and then extend right into the 162 fib extension at the 115.13 to 14 area. So that's the confluence there of these two fibs. Let's go back to the daily time frame and managed to bounce back fairly strong from there and climb back up into the 138 fib extension. So it has been drifting lower, but now it has managed to find some support just above the 115. That's the critical support zone here. Okay, I think we can remove this smaller fib. We'll see here. We'll stick with this one for now. We can also change that later, but for now, it's back up to the 138 fib extension, trying to recover back to the monthly pivot. The new monthly pivot is at 115.94. Just below the 116 level, and last week's weekly pivot was also sitting near there at 115.97. So that was a confluence of areas here, and that should turn out to be an intermediate resistance area. This was likely to be intermediate resistance. Okay, if it does climb back up through the 116, then it will face resistance back at the 100 fib swing low at the 116.64. So apart from this zone here, I think we can remove this level here now. Let's make it all right. Let's just identify this as the resistance zone with the falling 55 period EMA as well, coming down. So this likely reversion to the mean back to the 55 period EMA. So, but first it's got to break the 116, otherwise it could just consolidate in a narrow zone again, consolidation area. So if it does break out higher, then the 116.64 will be the resistance zone. Okay, and this week there's only minor news with German ZEW and the economic forecast coming out for the Eurozone. So the FOMC news on the Wednesday Wednesday evening, that was the initial move up for the euro, but then followed through on the Thursday with the dollar strengthening, and that was the drop for the euro, and until it hit the support. So even though the non-farm payroll data was better than expected, it did cause the other major currencies to dip lower initially, but then it managed to bounce back up as the US dollar was unable to break through higher. We'll see that later in the US dollar index. So let me just go down to the 4-hour time frame. And that was the initial move lower, right into the support zone, and then a strong recovery engulfing back up to the 138 fib. Likewise, this was the initial move for the FOMC, and then turn around with a evening doji star. There's the evening doji star candlestick pattern here, and followed through lower on the Thursday. Okay, let's move back to the daily time frame, and let's take a look at the US dollar index. So that was the follow through after the FOMC on the Thursday, a strong move up and trying to break the resistance zone, which has been resistive for quite a while and was unable to break through on the Friday after the non-farm payroll news, and was rejected, heading back to the 94 level, right at the 21 fib retracement of this move up. So this area 94.50 has been a strong resistance for quite a while. If we take a look at the weekly time frame, that was from the swing low from early of last year, and it managed to test it once in September and then fell away, and only recently it has been testing it again multiple times, but has been unable to break through. It's this third time now. So the US dollar can still break through later on if it's consolidating in this range and stays in this range. It could gain further momentum to break out higher. But for now, it's possibly stuck in the range. The Federal Reserve did announce their tapering starting this month, but keeping the interest rate hike issue as a separate topic. And that will be later on, perhaps in the last quarter of next year. All right, let's move back to the euro. So if the US dollar index is going to be stuck in that range, then likewise, euro may be stuck in the range as well. You could break through the 116 and then test the previous swing low, and then consolidate after that. Okay. So the jobs report, although it did beat estimates, probably the market was expecting more, and as well the it needs to continue to show further improvement because there's a supply issue on the labor side. So even though the numbers are jobs are available, but they're not being filled as there's not enough supply. So it's a slightly different issue. A supply issue instead of a demand issue. Okay, let's move on to the cable, where the pound sterling had a disaster on the Thursday with the Bank of England not raising interest rate as the market was fully anticipating. So it, as they had already hinted a couple of times that they would act, but turns out the wasn't enough votes. Only 2 out of the 9 voted for a rate hike, and they also mentioned that they may not even increase in December. So looks like the market is looking towards February for a possible rate hike this time. Okay, so with the surprise news that the market was expecting to probably dip lower and then bounce back up, it was blocked at the 55th, came back up to the 55th zone, and then instead of climbing up as it would have hoped to the 138, it fell instead with the bad news down to 135 and actually hit the weekly S3 on the Thursday night. And then on Friday, it dipped even lower to try to test the swing low, recent swing low of end of September, but managed to find support and recovered back up to close as a doji on Friday, back up towards the 135 area. So next week, there could be some further bullish momentum to recover, perhaps to the 62 FIB retracement, and perhaps even back up to the 136. That was the key support level where it broke down from on Thursday. So it could attempt to climb up there before consolidating. Let's see. Let's take a look on the 4 time frame on this move. It was fairly straightforward. I did manage to catch the drop after 5 minutes, waited 5 minutes for a slight pullback, and then join the bearish move down. And I will share that in my weekly blog as well. Now, you could actually fit this move down with this continuation move. Let's mark this in green here or red. Okay, the red fib, bearish continuation move, climb up to the 137 area before dropping So okay, and fell right to the 162 fib extension that's at 134.75. It dipped slightly lower, trying to hit the weekly S3 at 134.70. So in between those two levels, it dipped to a low of 134.71 before consolidating, and then continued to dip lower on the Friday. So this is what I use to go for my target. Okay. Let's go back to the daily time frame. So now these areas are now all resistance. That's the 50 fib on the bigger time frame. If we take a look, this is the swing move up. That's 50 fib in the middle there. There's another support zone that was broken at 136. So let's change that to resistance as well. We don't need this one up here. So this is the support level here. All right, so that's from 134.12 to the 00. That's the support zone. And just slightly below that, there's another fib on the bigger swing. That's the 78.6 fib retracement at the 133.73 area. Okay, but for now, let's see next week after this bearish candle and a long-legged doji on Friday, whether it's going to be able to recover at least this drop back up to the 136, or maybe it's only maybe hindered at the 62 fib area. So, and this week there's also no major news, just the preliminary GDP figures. No major US news as well. So we'll leave it to the technical movement. If there's no major drivers, no fundamental drivers. So we'll see how far this retracement or pullback of the cable is before it could try to retest this low. All right, so looks like the market will price it in probably below the between the 34 and 135 levels. Could be slightly above that as well. Okay, so for the moment, just above 134, there is strong support. And we'll see how long that will hold. Okay, so let's move on to the Aussie dollar. And the RBA announced on Tuesday, that was earlier for the Australian side, and they will not make any changes. They'll wait and see, even in their tapering. So that caused the drop on the Tuesday with the dovish outlook. the Reserve Bank will wait for further data as the recovery of the economy continues with the lifting of the lockdowns. But it's already dipped lower on the Tuesday, right to the new monthly pivot at the 74.23. Tried to find support at the 74 area. Confluence with the 55 period EMA. It did dip lower on the Friday before bouncing back up after the non-farm payroll report, hitting the 50 exactly of this swing move. So we'll see whether this will remain as support at the 74 area. So whether this is going to be able to climb back up towards the next fib at the, so it could be from this 38 fib to the 21 fib consolidation area. And should now change this to resistance. So move this one down. To the 50 fib. If it does break down lower, there is a danger of price moving down to the 62 fib retracement at 73.14. So that could be a potential support zone as well. So this area here is a big support zone right at the 73.00. So just above that, there's additional support, interim support. Let's also take a look on the weekly time frame for all the pairs. So for the Aussie dollar, there was definitely a bearish engulfing over 2 previous weeks. And we'll see whether it's going to extend further or whether the weekly 200 EMA will provide additional support as well. Okay, on the weekly time frame for cable, that was the continuation move of this potential evening doji star, and it did continue lower last week. So this week could be a consolidation period because of this wick, lower wick here. And let's take a look at the weekly time frame for euro, and close as a splitting top, signaling more consolidation. Unfortunately, for next week. All right. So do check out my other videos on spot gold and dollar yen, and have a safe week and a good trading week, and cheers for now.